story from the project. Innocent black man. Let me be clear. Damn, man. The story from the project. Innocent black man.
What up, YouTube? Welcome back to the Small Account Challenge. Today is day number 48. At the end of this video, I'm going to be explaining bid and ask in the spread and what spreads, in my opinion, you should stay away from if you're going to be trading in a small account because they can eat you up. Anyway, let's talk about today. Yesterday, after Jerome Powell spoke, the market took a nosedive. It fell about 18, 19 points. And you know when SPY do that, it's usually because on some news. But then in the aftermarket and the pre-market, a dead cat bounced, so some stock is gapped up. But I already know the market still lost confidence because of what he said yesterday. So I was looking to the downside today. Anyway, like I'm a big hip hop fan. So I remember years ago, Mace had a rhyme. He said, if you smack me, I'm going to smack you back. And if it lead to something else, then that be that. Yesterday we got smacked. So today we smacked them back. And that's how you do it. And I'm going to tell you exactly how we got them back in today's midday market recap. All right, y'all. So let's go over the trades from this morning. I only have my eye on a couple of stocks. SPY, what else had? Google, Amazon, and Apple. So ultimately, I ended up placing my attention on Google because that one to me had the best setup. As the market opened up, I don't trade the first candle. Google started to run up. I was like, all right, cool. Keep the guardrails on. Keep the guardrails on. So I waited for the next candle. I didn't want to get a bear trap. So I jumped in to the upside because it pulled back a little bit, hit a little bit of resistance, pulled back. But I was like, I don't think the bear's in control. So I jumped in going up. But the bears were in control and they began to smack it down. But the guardrails was on. We stopped out for a $20-something loss. I said, all right, cool. I see how y'all playing today. Got it. Enough said, now I know what's happening. So I waited for another entry. This time, like I said, the bears were in control. I waited for it to pop up. It popped up. I jumped in again. Held it for a little while. It kept going up a little bit more. I added. And out of nowhere, the candle dropped like I thought it would. And that's how we end up smacking them back. Got a nice trade on Google right there. But we wasn't done yet. We got out of that trade. And then I jumped over into the Tasty Trade account. Because remember, I told you, SPY had gapped up a little bit in the pre-market. So I said, all right, cool. Let's see how we're going to play this out. So cool. After SPY began to run up a little bit, it hit resistance that I like. Then it began to fall off. I jumped in, rolled it down, and caught a nice trade in the Tasty Trade account. But we wasn't done yet because, like I said, today I got the guardrails on, so I wasn't too concerned with stopping out if I needed to. So then I caught another trade on NVIDIA because NVIDIA started to shake a little bit. I waited for a nice entry on this candle here. It hit support. I jumped in, rolled it up. And that's how we caught a nice trade in the Tasty Trade account. We was green over there all day today. We was green all day today over there, which was good. Then I jumped back over into the Webull account. And I was able to catch another trade on PLTR. It was a chump change trade, but I'll take it. Got us a little bit more chump change, and that's how we ended the day over there with about almost $50. I'll take it. And then you can also see the Tasty Trade account over there. We ended about $35. We'll take it, and that's how we smacked them back today. You know what I mean? So we'll take that amount and throw it back into our piggy bank. There you have it. Come on, y'all. Listen, when you take a loss, keep the guardrails on and come right back at it. That's the name of the game because you never know what the next day going to bring. Remember, we taking these accounts from $100 going all the way to $100,000, $250K, $500K, all the way to $1 million. That's the name of the game. If you have a small account, come on over and join us. So anyway, like I said before, I want to go over a quick training on the bid and the ask spreads and what you should be looking out for when you trade these things. All right. All right, so let's talk about the bid and the ask. All right, cool. What is the bid? The bid price is the highest, that a person looking to get in a position is willing to pay, whether it's a stock or option or any other security. That's the highest price that a person is willing to pay. And then the ask is the lowest price that a person who had that position already is willing to accept from someone willing to get in that position. This is why once you get into a position, you're automatically down. I remember listening to a video some months ago and someone said, you're guaranteed to lose money in the stock market if you get in. Why? Because once you get in, you're automatically red. Why? Because the bid is normally lower than the ask. This is why commission-free trades is so attractive to stock traders. Why? Because when you got into a position years ago before they started the commission-free trade thing, remember, you're already down, plus you have to pay commission. So you were down already, plus the commission. So you got to cover the commission and cover the ask price before you start making money. Well, commission-free trades made that a little bit better, but still, you still got to cover the ask price. Now, so what are good and bad spreads? In my personal opinion, when you trade options or stocks, you want the spreads to be as tight as possible. For an example, let's look at SPY. Let me pull up SPY real quick fast so we can see what's going on here. Let's look at SPY. Okay, we're looking at SPY. Currently, SPY right now on the bid is 590.61, and on the ask, well, it's kind of moving, but it's 590 like 68, something like that. They're really, really close. So when you get in a position on SPY, you're not down that much. It don't take much to get green on SPY once the stock goes in your favor, because the bid and ask are so tight. But it's that spread. That's called the spread anyway. It's that spread between the bid and the ask, how market makers make their money. But see, that's why you want the spread to be very, very tight. I think SPY has good spreads. Apple has good spreads. What causes good spreads? A lot of volume and volatility. A lot of volume. And no, this is why Apple, stocks like Tesla have good spreads, because there's a lot of volume there. So it keeps the spreads tight and the market makers can make their money. But now, what are some bad spreads? I'm gonna show you. Let's look at if you have a small account. Let's look at Netflix. Okay, right now Netflix is pretty good. Let's look at American Express. Okay, American Express. Right now American Express on the bid is $294.97, and on the ask is $295.26. So you can see there's a gap there. That gap right there, you have to cover that gap before you get green. This is why you want to have tight spreads, because imagine spreads that are sometimes $3 and $4. Matter of fact, let's go to MicroStrategy. I think MicroStrategy. MicroStrategy. Okay. At the moment, it has pretty good spreads. Okay, but normally those spreads can be $3 and $4, $5, even more than that. So when you have a small account, you want to make sure that the spreads are very, very tight. Remember, the bid is the highest price that a person is willing to pay to get in that position, and the ask is the offer, which is the lowest price that a seller already in a position is willing to accept on that position. Anyway, guys, that's all I got for you, and I see you guys back at this tomorrow for day number 49. Peace.